Okay, I'm recording. So I'm here with
All right.
James. Who are you? What do you do? Why am I calling you?
Well, I'm James. I'm a real estate agent, and you regularly post about the myths that you see on Facebook or social media, or you hear people talking about when it comes to the path of homeownership. So you called me and said, James, let me ask you some questions to find out if I'm crazy or if people are just uneducated. So I'm here to answer some questions for you.
Yeah. So I wanna. I feel like because I'm not a real estate agent, people don't necessarily just trust what I say at face value, despite the fact that like I own two properties and I'm pretty big on real estate in general. But real estate in its simplest form is just finances. And I kick ass at finances. And I'm like, why the fuck won't you people trust me when I say these things? So I've got two cases here that I want to like break down. So we're gonna start with the most obvious one that happens to so many people. And I'll just ask the question directly. Do you need 20% down to buy your first house?
No, absolutely not. And a lot of people are not even using 20% down because the 20% down is a lot of freaking money.
Yeah. So, and I think my guess is that came from somebody watching a podcast talking about people like me or you, or like Jesse Lee is another big like real estate person on Facebook, talking about buying up investment properties and needing a certain amount down to do that, which still may or may not even be 20%.
And I think a lot of that also comes from because people are used to traditional banking. So they go to their Wells Fargo's or their Bank of America's or whatever banks are out there. And what they don't understand is those depository institutions, they're not in the home loan space. They offer them as a convenience. So a lot of times when you see their rates based on 20% down, but there's programs out there, that'll give you that you can get into with 0 to 5% down, and with down payment assistance, they'll even cover the down payment for you.
Right. So
you don't need the 20%.
yeah, and I don't understand how this has perpetuated as long as it has, or as deeply as it has, despite the fact that I don't know anybody that's bought a house in the past 20 years that has had to have more than that, like earnest money. Like a few $1,000s is enough to get it done. So I'm like, I don't know how many ways I can tell people, no, you do not need it. So the other one that comes up is people get confused about loan to value ratio and what the issues with like mortgage insurance are, which that is like a legitimate thing, that at least that's actually real. But can you break that down a little bit?
So the need for mortgage insurance?
Yeah. Where does that come from? What's the loan to value ratio? What does
so
that
that's
mean
where the whole
for people?
that's where that whole 20% comes into play at. If you put down 20%, that means you don't have to have mortgage insurance. And so basically what that mortgage insurance is, it's just another insurance to protect the lender for if you decide, oh, I'm going to default on this loan.
Yeah, and it's even a little more specific. Like if you're going to get into a house, break the house, and then default on the loan, so the lender wants to make sure that that they're covered for at least that 80%. So that's where the 80% loan to value ratio comes from. So I think there's another thing that people don't really understand is like the value is what you pay for the house. when you pay for the house. But you can almost immediately prove a value other than what you just paid for the house. So it's like there's a lot of flexibility there as far as the insurance goes. But the other part is like a lot of people think that mortgage insurance is like some like $1,200 a month payment across the board. So if we're looking at like in Kitsap, median housing prices are like 425 ish.
Okay.
So that's like we're looking at like 1% for mortgage insurance, and that's just kind of a ballpark number. It's going to depend on a bunch of things.
That's
So
that's yeah, that's a fair number.
yeah, so it's like $425. Like, what does that mean for people who otherwise have the ability to buy like a $400,000 house? People that are making 80,000 a year that can clear that 2,000 or so. I guess.
Well, what I tell people is it doesn't matter if there's mortgage insurance on the house or not. At the end of the day, it's going to boil down to the payment. If your payment needs to be $1,600 a month and you have $1,600 a month with mortgage insurance, or you put the 20% down and you get $1,600 a month without it, you're still going to be capped at a $1,600 a month payment. So people who are worried about the mortgage insurance, they really shouldn't be worried about the MI. They should just be worried about getting themselves into a house, because as soon as they get that 20%, whether it be through equity gain, or through paying it down, they're just going to send in the letter to the lender and let them know, hey, I'm below 80% now. That's get this mortgage insurance off, and it's going to come off anyway.
Right.
So the whole thing about, there's going to be mortgage insurance, I just usually tell people that's just a fear-based thing. Or if they say they're going to save up 20% for a down payment, a lot of the times you and I both know that you're not. Most people are not going to save up that much money. Their best bet is just to get to the house and start gaining that equity as fast as possible.
Right, exactly. And that's what I try to tell people. I'm like, the difference between waiting 2 years, let's say these people are fucking rock stars and save up 20% in 2 years. Never seen it outside of people like me, but let's say that's their situation. Versus buying the house and paying down that I don't want to say paying down, because we're also dealing with appreciation of the house itself. Like here in Kitsap, we average like 8% over the past 20 years, 8% per year. So let's say it's 5% over 2 years, right? That comes out to 7.5%. 12.5. So then over that same span of 2 years, you only would have had to come up with the 7.5% down by just getting into the house and putting that money into your investment rather than letting it sit in a bank account.
Exactly. And also, if you're going to just be worried about, I'm going to save up for 2 years, you don't know what's going to happen in the market in that 2 years. Okay, great. We'll say the home prices slow down, but now interest rates go up. So you save 20%, and you're still not going to be able to put 20% down now because the interest rates are so high. And actually, I didn't quite say that right. You're going to be able to put the 20% down, but you're not going to be able to afford the same house. So theoretically, you will not be able to buy the equivalent house once you have that 20% down. Or the rates could drop, and all of a sudden you have this buying frenzy again like we did during COVID, and now you're just completely out of the game. I don't care if you have 20% or not, because now you're paying up appraisal gaps, like, hey, it didn't get value, I'm going to pay the difference. Now you're just definitely not putting 20% down.
Yeah, so you're losing 3% per year on whatever your savings, depending on how you go about it. It has to be liquid, so you're probably losing money on it. And then you're also losing out gains on the market, and you're losing position, which, I mean, we're not going to get too much into position because that's a lot for like first-time home buyers. But you're losing out on your ability to make a decision, is more or less what that is. So let's recap and correct me if I'm wrong. Do not try to come up with 20%. Do not wait. And do not be afraid of mortgage insurance.
I will say, if you have access to the 20% and someone's willing to give it to you, or you can get it quickly, definitely use it. But do not base your decision waiting long term to save up 20%. So yes, do not for that. And do not freak out about mortgage insurance. I agree on both of those things.
Yeah. Okay. So that's like most people that are seriously considering buying houses right now have these fears that they should not be afraid of, and they have this decision paralysis, and they're using this information as a justification to perpetuate this decision paralysis, as opposed to getting into a house and just doing it. So that's the first case, right? The second case, and these are people that I deal with on a daily basis, right? People who work for themselves or gig workers. So we're talking about DoorDash and Lyft drivers and OnlyFans girls and your handyman that wants to start his own business, and other people who let's assume they're cash rich. Otherwise, they're probably not going to be trying to buy a house anyway. But cash rich people who don't have W-2 wages, who think, oh, well, if I just save up 20%, I can buy a house. Explain why that is catastrophically wrong.
Well, you need to be able to show some kind of income. Pretty much what it boils down to. And I have some industry clients that I will use them for an example. When I first started helping them purchase homes, that was a huge challenge because they're like, oh, I have all this cash, but you need to be able to show a paper trail. You need to be able to show that the income is coming from somewhere. Doesn't matter if you have $50,000 sitting in the bank, or you have $50,000 cash. You're going to have to put that money into the bank so it can show proof that it was legitimate money that they can track, because banks don't like money they can't account for.
Right.
So you just go ahead.
To put the finest point possible on that, my standard is, if you have not paid taxes on it, banks don't give a shit. They don't want to. They don't even want to see money that you haven't paid taxes on, because that also could put them in a weird situation should they decide to work with you, knowing that you're probably committing tax fraud.
Yes, you cannot have tax returns showing that you made $20,000 and then come to the table with a $200,000 down payment. There's going to be a lot of explaining that needs to be done. And yeah, I can't even tell you the red tape you're going to have to jump through and what the underwriters are going to say about that.
Yeah, and most are they called brokers for mortgages still? I don't know, agents?
Yeah,
whatever.
they call them LOs, brokers, whatever.
Yeah, most originators will not even touch it. Like, they're not even going to be like, oh, hey, you're going to have a lot to explain to underwriting. They're going to be like, fuck no. Like, I do not want to go to court to testify that you've committed tax fraud. I am not fucking touching you. I'm not even going to look at your books. Like, they won't even send it to underwriting.
And to be transparent, I'm not a lender, so there could be programs out there that do work. I know when I initially got my industry clients, I was like, I don't know how this is going to work. And they made it work, And so I don't try to figure it out. It's not what I do. But I can just tell you, you just need to make sure you have some sort of documentable income And yes, it's nice you have a down payment, but they need to be able to see that that money's going to get paid back.
Right, right, and I think that's a misconception that a lot of people have about loans in general, is leaving it at they want to see that you can pay back the money, when they specifically want to see that you can pay back the money per the amortization schedule. Meaning, they don't even want you to pay it all back early. That loses them money. They
No,
want
yes,
you to pay them exactly what they're asking for the full 30 years, 20 years, 15 years, however the loan is structured. They want that consistency. They want that length of the loan, because that's how they make all their money. That's where they get interest from and all of that. So people who are like, oh, I've got, let's say they've even got $300,000 that they want to put down on a $400,000 house, and they're like, oh well, I'm in between jobs or something, and they're like, yeah, I can probably pay off, I could make $500 a month to pay off the loan over the next 30 years. But I think what people don't realize is that lenders don't want to do that. That is still high risk, and it doesn't make them money. High risk, low reward. So, and I deal with this on an almost daily basis, where people ask me advice like, hey, how do I do X? And a lot of it is to do with doing their taxes for their 1099, the contractor taxes. And I tell them, I was like, you need to pay taxes on money. So if you want to buy a $400,000 house, you need to make about $8,000 a month to show that you can clear, 30 to 25% of your principal, interest, insurance, and then mortgage insurance on top of that. And they're like, well, I make that much, but I don't want to pay taxes on $8,000 a month. I want to do all of these write-offs. I want to get all these deductions, all this kind of stuff.
And that's actually perfectly fine. The only thing I always tell people they need to do, again, because I don't do it. As soon as my clients start talking to me about mortgage and all that, I send them directly to my lender, because that's what my lender does. He's an expert at that. I just let them know. I'm like, hey, have you paid your taxes for the last 2 years? Yes. Do you owe back taxes? Yes. Well, you're going to have to pay your back taxes, before it closes. But talk to the lender, and he'll let you know exactly what you qualify for. And so at the end of the day, really, for me, it just really boils down to people knowing what they qualify for. Because like you said, someone could have $300,000 and wants to buy a $400,000 house, but they might only qualify for 125. So being that they have 300,000 down and they can get a loan for 125, guess what? They can buy that $400,000 house, because they can put that 300,000 down, and most lenders will probably take that deal.
Yeah, but only if they actually show they make that much a month.
Yes, that's why I said they'll approve them for whatever they can qualify for, and then if they have that extra money to put down to make up the difference, we're good.
Yeah. So like, I try to think of, so a situation I found myself in a couple times is where, like, I could even do like bank statement loans, because I've been in business for like a decade. So I can even go and be like, hey, this is my bank statements. This is how much I'm making. But if I haven't filed my taxes, all bets are off. And I think that's
Yes, you have
something.
to file your taxes.
Yeah, and all of these people, so many people, think they're gonna get into business and be able to like hide money and still get financing. It's like, no, it doesn't fucking work like that. Like, banks can only finance you based off of the money that you are telling the government you also are making. That's like the only guarantee they have. So, I know it's going to change based off lenders, but what is the typical number of years of tax returns a self-employed person needs to show when applying for a loan?
2.
2, right? So that's the other thing I come
Yep.
up with. So many people are like, oh yeah, I finally made this big paycheck, I want to buy a house, and their first year of taxes was like $10,000. And it's like,
Yep.
yes, you may have made a decent amount of money over the past 6 months. You may have already filed your taxes 1 year or 2 years, but they need 2 years of solid, regular money. And they don't even like it if your money's like all over the place. They want that consistency. So the other thing is, and this can apply for rentals too. Do you do any rental management for anybody?
I don't do rental management, but I do have people that do it for me.
Yeah, so you're at least vaguely familiar, right? Rentals
Oh, yes.
are pushing for credit checks, like across the board. And these same
yes,
people,
like that.
yeah, these same people that are like, oh, well, my credit's garbage and I make all this money, so I can't get an apartment, so I'm just going to try and buy a house instead. They're like, hey, yeah, you still need credit for that. And I don't know what the disconnect with a lot of people is, thinking they can like not have a bank account. They can run their business all cash, show somebody a stack of like, $50,000 in cash and think that anybody wants to work with them. It's like, no, you need to pay your taxes. You need to have tax returns. You need to have your credit needs to still be good. Like, I don't know off the top of my head, what's the minimum for I think it's, what is it, USDA or FHA has the like secured low income loans? I don't remember.
I don't say there's a minimum. It's whatever I just tell people it's whatever you can get through underwriting.
Yeah, so it's like 560 or something like that. Is like the bare minimum, even if like the government is the one that's paying your loan or guaranteeing your loan. And there's so many people that are like, oh yeah, I maxed out 20 credit cards and my credit score is like a 500 and I think I can get a loan because that's 50 points above 450, right? And I'm like, oh my God. So yeah, I don't know. What are some other like what the fuck moments you've had with people trying to buy a house and either thinking they could when they obviously could not, or thinking they couldn't and you're like, no, you're good. Like, who told you that? Do you have any other stories?
For myself, I think it's just mainly people just don't know what they're capable of, just because they're scared. My biggest thing I always tell people is just talk to the lender. I always tell people it's kind of like, I know it's going to sound just completely weird, but I tell people it's like your first STD test. I remember when I was younger and I went and got my first one. It's like you just think you're good to go, but you just have that fear to go do it. Then when you find out, it's like, oh, I'm clean, I'm good. Same thing happens with getting your mortgage. Everyone thinks they got bad credit or everyone thinks they have a great credit. And until you actually just complete the process and do that so the lender can really get a true picture of what you are qualified or what you're not qualified for, you never really know.
Yeah. I think that sums up both sides of it. Is there's the people who, assume they're clean and they may not know, or the people who think they're not clean and then they come back and they're like, oh, everything's fine. So I mean, I guess we should avoid the term clean. That's kind of derogatory, but
Yeah, I wouldn't say.
nothing
I wouldn't
surprising.
I'll say, I will say you're aware of what's available. Yeah, definitely don't want to be derogatory. So I would say you'll be aware of your status. There we go. So we can move forward, or is there things I need to work on?
So, holy fuck, that was loud. Okay, so my advice to pretty much everybody is go talk to a lender. Go talk to at least 3
100%.
lenders and ask for a pre-approval if they'll give you one, or figure out what you need to work on. And they'll at least give you like an idea of what price range you could be looking at. And then just go look at a couple houses.
And the thing is, it's not even a pre-approval though, because I won't even entertain conversation. I won't say I won't entertain conversations. I typically won't work with someone that just has a pre-approval, because a pre-approval is literally nothing. It's just them telling a lender that, oh yeah, this is all of my information, these are my numbers, but the lender doesn't pull any of your information until your information is confirmed. So they look at your credit, they look at your income, and they do all of that stuff. That's when you actually find out what you're qualified for. But before then, it's just kind of hearsay. Because I mean, you can just go on any website or a lot of websites and get just a pre-approval just based on information that you put in, and then come out thinking, oh yes, I'm qualified for this house. I got a pre-approval. When in reality, you're really not. You just got a qualification based on some arbitrary numbers and things that you put in.
So what is that called then? To like tell people like, hey, go talk to a lender, get fill in the blank. What is that called when they've actually done your paperwork and everything?
So when they've actually done your paperwork and everything, it's called an approval. A pre-approval is just when you just go in and you give them, like, you'll be like, okay, this is my income. You'll give them all your information, but you don't give them the ability to pull your credit. So,
Okay.
so they'll be able to, because if I can go online and say, okay, I make this much money. This is how much debt I have. I can just put some stuff in there. And based on the numbers I put in there, it'll say, okay, great. Based on the information you gave me, this is what you're approved for. But until they actually get to look at your information, they can't really give you a real number. So
Okay.
I
So
always tell people, I mean, if you're always basically, if someone's just curious what their credit looks like, go to Credit Karma or something, pull your credit for free. No big deal. If you're looking for something that's more like, okay, what can I get qualified for because I'm serious about this, contact a lender and just go through the approval process.
so an approval, get an approval, and then
Yes.
like then because I mean that's really the first step. And I tell people to do this like a year before you're trying to get a house. Um, for a couple reasons, because like I said, you go in for a test, you never actually know what the results are going to be. So you go in, you get your approval. Maybe everything is perfect, and you're surprised, and you're like, oh wow, I can go get exactly what I want right now. But that is
Mm-hmm.
not very often the case. So a lot of the times, your credit will either not support what you want, or there's also cases where good lenders are really transparent and they're like, hey, you've got a 705. If you can get that to a 720, that's going to save you 5 points, which is going to save, or not 5 points, that's astronomical, 0.5 points, which will save you $50,000 over the life of your loan. Do you want to wait 6 months and get back up to a 720? So I tell people to start, like, run your credit, get an approval a year before you want to go buy a house.
Well,
And
there's no reason to get an approval a year before you want to buy. Only thing you're going to want to do is just look at your credit and just make sure it's clean, or if there's things that need to be cleaned off, take care of, because your approvals are going to last for 90 days. So there's no reason to go through that whole process and to pay for all that stuff and waste all that time. Just really, if you think it's going to be a year out, just pull your credit, and then look at your trade lines. If you notice there's discrepancies on your trade lines, take care of them. Look into them and start working on improving them.
yeah, that's more what I was talking about when I said get a pre-approval.
Okay,
It's
perfect.
like, a year ahead of time, check your credit, get a pre-approval. And if you're honest, those are going to be close, right? It's not, an approval. But if you're not inflating shit and you're not inputting just random numbers, you're going to have an idea of what you can go look for. Because I think what ends up happening is you give somebody a 5-page checklist of do this in the next 90 days while your approval's good. Most people are just going to have a meltdown if they're not, familiar with these processes, or have somebody like you to like really hold their hand. But a lot of people these days don't even like that sort of contact or that sort of like accountability.
Mm-hmm.
So I tell people, like, run your numbers a year ahead of time and be transparent with the realtors, obviously. Be like, hey, I want to buy in the next like year or so, but I don't know what I'm looking at. And most realtors would be like, okay, I'm not going to like jump through my ass and drive 2 hours away thinking I'm going to get a commission on this fucking $2 million house to show to somebody who's not ready to buy. But there's going to be somebody local who will be like, oh, yeah, I'll be out there in 2 weeks, because then you have 2 weeks. That's not eating into your 90 days. And you can still get an idea of how the market works and what questions to ask and what those steps are going to look like and the timelines.
Mm-hmm.
I know when I bought a house, I bought VA and it was 0% down, and that's all I knew. I didn't know anything about an appraisal. I didn't know anything about a home inspection. I didn't know anything about earnest money. And if I wasn't me, I would have given up at that point, right? Because I'm like, fuck, where am I going to come up with $800 for a good home inspection? Where am I going to come up with $1,600 for my earnest money? Because, my house was only $160,000 when I bought it. And it's like, I think having people start that process a year before they think they're really ready to buy will result in a lot more successful home ownership. I think that makes sense.
Yeah,
I don't know.
it could. I
'Cause,
just think.
Go ahead.
I just think whether you do it a year in advance, whether you do it 90 days. My thing is, as soon as you think of it, just pull your credit. Like I said, you don't have to contact anybody to pull your credit. If you're worried about people knowing your business, you can go to Credit Karma, you can go to Experian, you can go to Equifax websites, and you get a free credit report anyway. So just pull it, look at it, and keep in mind, like, just because you pull one credit report and it says, one of them says, oh, you have a 602, the next one might say you have a 670. When they look at your credit, they're looking at your mid score anyway, so they're pulling it from all three bureaus and looking at the middle score. But my thing is, as soon as you think about it, you should just go get your credit checked. Pull it yourself if you don't want to deal with a lender. If you feel like dealing with a lender and you want to get educated, contact the lender and let them educate you. And they'll explain everything to you. And then once you're ready to connect with the lender or the real estate agent, connect with them then. Or just find a real estate agent that you're comfortable talking to. Reach out to them, and I'm pretty sure they'll be pretty comfortable doing the same thing for you. Just sending you to a lender that they've had great success with that would be happy to help you also.
Yeah, I was going to ask what I was leading into, which you pretty much already answered there, but to get a deliberate, pointed statement, do you think lenders or real estate agents are going to be bothered by somebody who knows fuck all about buying a house contacting you and being like, hey, I know fuck all about buying a house, like, can you help? Do you think anybody's going to be mad? Yeah, nobody's going to be mad about that.
They're probably honestly be super excited that someone's reaching out to them to buy a house,
right.
Or to learn to buy a house. So I just say reach out to them, like I give them all the time, and they're like, I want to buy a house. I'm like, great. They're like, well, what do I do first? Here you go, contact the lender. I make the introduction. And fortunately, my lender started off as um, as an accountant. So he's super financially savvy, in New York, and he was with one of the big five accounting firms. So when I send him people, like he does a full like financial breakdown for them. He'll show them. He'll just find out what are your goals. Do you want to just find a little house to live in, or do you want to be an investor? Are you looking to move in 3 years? And he'll actually make several different scenarios for you based on where you're currently at. Now, of course, if you're not ready to buy because you have some things you need to work on, he'll tell you exactly what to do, you know? But what I find, if 10 people reach out to me, maybe one will follow through with the lender because I think a lot of people think I have this magic pill, or they're so used to other real estate agents just making it sound like it's going to be just this magical thing and tell them everything they want to hear. I just tell people straight up, like, look, I really cannot do anything for you until I know what you're willing to do for yourself and what we can do for you. You know?
Yeah.
But once you get that all set up, I'm willing to go to war with you. You know what I'm saying? Let's go to battle. Let's go win for you. But also at the same time, I need to know that you're fit to go out into the battlefield. I need to know that you're fit to start writing offers. I need to know that you're going to be confident because you have strong financial backing behind you, that when they push, we can push back with confidence. So that's my thing. Always go talk to the lender first. If you don't know a lender, reach out to an agent. They'll send you to their lender, and it doesn't matter who the lender is. Just make sure you just figure out what you qualify for. And if you don't want to talk to a lender, like I said before, just pull up one of the 3 credit bureaus. Even use Credit Karma. Pull your own stuff. Pay your bills off. And yeah, it's pretty simple. Need down payment assistance? There's plenty of programs out there. Reach out to an agent or a lender. Be like, hey, I need help with down payment. What do you got for me? There's a ton of programs that we'd be more than happy to show them to you.
Awesome. And I think just a closing remark. Do you like, this seems ridiculous to ask because like I know the answer, but it's like, do you think people in the housing industry, whether it's lenders or real estate agents, hate new home buyers?
No.
Right?
I think
so many people are so afraid, and I'm like,
I don't think they hate it. I honestly don't think they hate it. I just believe that there's ideas on both ends. Home buyers think that real estate agents hate them, because they're first-time home buyers. And in reality, real estate agents are just saying, gosh, I really wish you would just trust me because I'm trying to help you. Because a lot of first-time home buyers just look at real estate agents as like they just want the commission. But at the same time, it's like you don't understand on the back end how hard they're actually going to have to work, because a lot of first-time home buyers go in with their guards up, which I would too. I'm not taking that from anybody. I would be like, I don't trust you, you freaking car salesman. You just want your commission. I'm feeling the exact same way. But as an agent, I just think a lot of times I'm just like, oh my gosh, just trust the lender, and be honest. That's the more honest and transparent everyone is in the transaction is better. So no, real estate agents love first-time home buyers. Yes, sometimes they do take more time because you need to educate, but that's good for both parties because the more more real estate agent educates their clients, the better the real estate agent gets, and the more questions a home buyer asks, the more comfortable they'll be in the transaction. So for home buyers, I guess first-time home buyers, my advice would be check your credit. If you're embarrassed or don't want anyone checking it for you, if you're comfortable with it, reach out to a lender or reach out to an agent that can hook you up with a lender, and then just be completely transparent all the time. So if there's questions you have, ask them. If you don't know something, ask it. There's no such thing as a stupid question. As a lot of times you'd be surprised, real estate agents may not be able to answer your questions. And if you have a real estate agent trying to answer all your finance questions, I personally look at that as a red flag because finance is not what I do. I always send them back to my lender. Can I answer those questions? Yes, but because I don't do it every day, I have my lender answer it because I don't know, maybe their program changed in the middle of our conversation. And because I'm not in there looking at them all day, I could not tell you that.
Right. Yeah. And
So that's my stuff.
I try to tell people like taxes change every year. Fucking lending changes every day. Really. All of these things are constantly changing.
Oh, and another big thing. Stop trying to match the rate of your friend. Okay, I understand that Johnny got a 6.5% interest rate, and you want a 6.5 interest rate. Okay, or a 6%. But what you don't understand is Johnny had a friend who brought down his interest rate for him, and Johnny had an 800 plus credit score.
Right.
So you got to keep those kind of things in mind.
Yeah, or it could have just been a Tuesday. You know, I don't. I think people are fundamentally misinformed on how interest rates work in general and how that's tied to inflation and how those are set by the Federal Reserve. That is a whole other conversation.
Yes, which we're not going to go into because I don't talk. I don't talk finance.
Yeah, exactly. It's like I said, it could have been a Tuesday. That's about how accurate anything you can say about like interest rates in the finance world goes. It's in such a constant state of flux that you can't possibly accurately or honestly answer anything. So, which is also why those approvals are only good for 90 days because that's like
exactly
the maximum amount of time a lender can say, okay, the market might stay this way for this long. So, okay. Any closing remarks?
No.
Yeah, I think we already went over everything. So I'm going to stop recording and then I'm going to ask you a couple questions
Okay.
offline.